G'day, this is Graham Bibby on the 5th of June 2015, giving you a weekly Camtasia after what has been quite a difficult week, really. The market continues to backfill from the progress it appeared to be making just over a week ago. And I want to start off with the Standard & Poor's 500, which is the US stock market. Here's my little arrow floating around. This is the end of last year where the arrow is now. Here you see 2015, and you can see the market is currently smidgen above where it was at the end of last year. We broke out from this resistance level in January. And then really, since we broke out and we got above 2,100, we've not really made any progress. We keep coming back even to below the start of the year, and now we're back to where we were. So that's quite disappointing, especially as we appeared to be moving up just over a week ago, having tested 2,100. Currently, we're marginally above the 2,100 level. This area, give or take a few percentage points either way, should be the support level for the market, and if it breaks that, then we're going to be not looking so great. I thought today we'd have a look around at a few areas so you can get to see what's happening around the world. This is Singapore stock market. Started off the year this level. This is the ETF, which reflects the Singapore stock market, the exchange traded fund, and the market is down quite a bit. It's down a lot since the beginning of May, and you can see here since the middle of last year, this is July, the market is down a heck of a lot. Hong Kong's more or less following China to some degree. It's been trading sideways since the beginning of April. Tried to make headway just over a week ago, looking good, but then was broken back. It's got support here, but at least it is up from the beginning of the year. Emerging Latin America, this is where it was last August, and it had started a rally in March, but that's all turned over in May, so that's not looking great. The Australian market, which seemed to be making progress as the commodities index and oil seem to start rising. Sorry, this is not Australia. This is Asia ex Japan. Let me just get Australia. Where are we? I thought the chart was confusing. Yeah, here we seem to be making some progress here from the March-April level, and then we've just been in a bit of free fall again as the commodities and oil index, mainly commodities, has been finding life difficult and turned over. And if you've got a self-managed super and you're not following my strategy and you're in Australia, the circle here shows you where the level you would have been at in last September and where you are now, which is roughly a 25% decline if you bought into buy and hold, which institutions tell people that they should do, even though they trade the markets themselves. I mentioned oil, so here is oil. This is the rise I was mentioning about March to April. That's been going sideways a little bit in the last month, so that's not great. Gold and silver, well, this is the gold. Sorry, come on, this system playing up this morning. This is gold nugget. The leveraged ETF has been bottoming out for some time. It can't really make any progress, and the big exchange traded fund is GLD. Again, no progress there. Looks all a bit gobbledygookish, but when you put this on, this is the peak in 2011 GLD, and you can see there seems to be some support around this level. It did look at the beginning of 2015 as if gold and silver are going to start to rise, but still under pressure at the moment. What I had on earlier on was this chart, which is Asia ex Japan, which is why I've been bullish on this because it was all breaking upwards strongly in March and April, but has now turned over. So, I have to follow the trends. It did look to me that in, emerging markets, select ones, especially in Asia, were moving to the upside. Not to be at the moment. I just want to show Singapore. I showed you already, under this pressure, selling off quite strongly. Been a bit of a volatile few years, difficult to make money for buy and hold people. And if you go back further, 2012, again, this is why I don't subscribe to buy and hold. It's doing that. We go back further, this is back 4 years, it's doing that. And if we go back, even a bit further, you see this level here, you see this level here, this level here, this level here. This is 1996. We're 20 or 19 years on, and the market, if you just bought and hold, is roughly the same level, which is why I don't subscribe to that nonsense. Here is Gilead Life Science of the same time period, and again, this is what happens when we break out to the upside. This is what I've been expecting and wanting the US market to do, because if it does get some upward momentum, then it will propel my stocks seriously higher. Now, there's a Greece debacle going on at the moment. If they get some sort of push the can down the road solution to Greece, then I think the markets would go hooray, and off we will go. Bear in mind that superannuation schemes, retirement schemes are compulsory in a lot of companies and countries. So money's flowing into those things on a monthly basis, and it has to be put to work. So there's a build-up of cash, and if that starts to go into the market, as we've seen in China, then there'll be significant upside movements. When we broke out of this range here, Gilead Life Science was somewhere around 105. It's 113 now, which is not a bad move given what I've shown you everywhere else. Let me just see. Yeah, this is the China holding we have in our Insiders Club FOS service, Fund Optimization Service, and it's just recovered to be virtually at the all-time high. So we've had breakout consolidation, breakout consolidation, breakout, bit of a correction, breakout, bit of a correction, and it's still looking quite well supported. Another stock that's been a gem for us, Skyworks Solutions, corrected a few days ago, but it's still in an uptrend, and the stop loss position will be somewhere around 105, 104. That's looking good. The US dollar was in this decline. It's had a bit of a rally, then turned over again. So, as frustrating as it might be, we seem to still be on that on hold situation, waiting for the market to get some traction. Looks to me Facebook, which I sold because it broke below support, broke down here. Now seems to have found support here at about 79. It's 82 at the moment. That's a bit of a breakout from there. The overall market needs to follow it. Apple, it's backed off this level here, which is resistance. Really like to see the market move up next week. Now, if over the weekend we get some news of a compromise, a solution, a kick down the road can for Greece, that might be the catalyst to send the markets higher. So all I can say to you is over this weekend, I'm doing some more very in-depth analysis on my Insider Club list. I might be reviewing a few stocks, kicking a few out of my watch list, putting some new ones in. So next week, watch very, very closely for new recommendations, and I'll be sending out a special report. So from now till then, this is Graham Bibby, who's watched these markets every day now for something like 35 years, and I continue to monitor every day for you as a member of my Insiders Club, which I very very much value, and I will continue to do so. And I am in no doubt whatsoever that at some stage, undervalued stocks with superior earnings must deliver, because by their very nature, if they're not delivering now and their earnings are still continuing, the stocks on a relative basis are getting cheaper and cheaper, and also on an actual basis, because if the earnings are increasing 20 to 30% per annum and the stock isn't going up, it's becoming better and better value. So profits that we may not be making right now are profits for the future. This is Graham Bibby, welcoming any questions you may have, any analysis you might want of existing portfolios you have. I'm here to help and willing to help. So it's 10 minutes and 55 seconds saying now have a great weekend, and I will be back to you next week.